Markets are in turmoil once again. The China trade deal brings back volatility. All right, Trent Bradshaw, Brandon Rogers, Bradshaw Financial Planning, and thank you for joining us for Mind Your Money. Wanted to come back to you today to give you a market update on some events that have occurred actually just since Thursday afternoon. Hadn't been long. It's been a drastic correction in the market over the last 2.5 days, and a large part of this correction has come from President Trump's tweet in regards to adding additional tariffs to $300 billion in exports from China. Well, China has retaliated by lowering the valuation of their currency, which pretty much wipes out the increases in tariff to combat that. In addition to that, a surprise here on Monday afternoon, latest announcement says that China's going to kind of pull back on their promise to buy U.S. agricultural products, which is not good. I know we just signed a $16 billion aid deal for the farmers of America, and now they're looking at potentially not having any potential exports of soybeans and other items to China, which obviously consumed a lot of those goods. So that's why the markets are down anywhere from 2 to potentially 4%, depending on what index you're looking at today. All this correction that's occurred, it's been violent, it's been quick, have occurred in the last two and a half trading days. So what do the indicators tell us right now? What do we need to do to the portfolios, Brandon, based on those?
Yeah, indicator-wise, I mean, honestly, everything's still showing positive and green to stay in. We'll probably have a change of that overnight on the short-term one, that is to say. So we'll just have to, keep everyone posted from that end. But, again, this is what we've been talking about all year. Unknown volatility is happening right now, and again, it seems like it's been the same story as far as the interest rate environment and the China trade deal. So,
well, the interest rate environment was received pretty well. We knew we were going to get a 1/4 point cut. Followed up with Thursday, market was up big, and then we got that tweet, right?
Right. Yeah, and the tweet just didn't go so well from that end. But I mean, Trump said he's going to do increased tariffs as of September 1st. So we still got some time until that time frame's continue. We'll probably think the volatility is going to continue throughout. And then there's also a G7 meeting at the end of this month as well that maybe will give us some further clarity. But I mean, again, indicator-wise, we'll keep a close look on those. But again, this is why we've kind of held the reins back all year, and we do have some more fixed income on the sidelines to help with this.
Well, it's definitely an emotional roller coaster in regards to the market. We know the volatility is back. We're relying on the data to make changes in the portfolio, and we'll be back with updates if we do that. The good news is we've been light on equities all year long, taking a more conservative stance. Although it doesn't wipe out all the downside, at least we caught a little bit of cushion today. All right. Well, we'll be back with updates. This is Trent Bradshaw, Brandon Rogers, Bradshaw Financial Planning, and Mind Your Money. Thank you for joining us. We'll be back soon.